So welcome to my channel. I am with Julie Mason with Fairway Mortgage, which is really the only brick and mortar location for mortgage lending in Queen Creek, Arizona. So thanks for being with me today, Julie.
Thanks for having me.
So I want to draw on Julie's expertise when it comes to specifically the first-time home buyer. This is a group of people that I often get the most questions from. So Julie, I have a lot of questions for you.
I'm ready.
Are you ready? All
Yep.
right. So I'm going to start with a humdinger, and that is, what is the number one mistake that you see new home buyer applicants make?
Not having a budget. I had somebody come to me this week and they said, well, we think we could afford what we're paying for rent right now, so that's $1,800 a month. So I said, that's a loan for about $230,000. They said, but the houses we want are $450,000. And I said, well, that payment's $3,000 something. So we have to come together and help them decide what they can maybe do without. Could they drive a used car instead of a new one? Could they cut back on some of their vacations? Or what can they do to be able to afford that payment? Because it's really an investment in the future.
Right. So there's definitely a difference between what people think they can afford versus what they're going to be qualified for getting a loan for. And I often see this as well. So I tell my clients always the most important step and the first step they should take in home shopping is getting pre-qualified for that mortgage loan, seeing someone like Julie. So great. What are some tips then, Julie, that you have for new home buyers other than making sure that they get pre-qualified and have a budget? What are some
Get a
other
payment
tips?
in mind that they'll be comfortable with. You bet. Next would be, for sure, get a copy of your credit report. Know what they're saying about you. And with enough time, we can help you spruce that up a bit, where your interest rate and your payment will be lower as a result because your credit's in better shape. If you already know it's in good shape, great. But get a copy of it so we know what people are saying. And that's critical. That directs us as to what kind of a loan we can do sometimes and what your interest rate's going to be. And that affects your payment.
Great. So it sounds like there is some pre-work to getting pre-qualified. So another question that I have for you, and I get this a lot from new home buyers, is how soon in advance of purchasing a home should they begin the mortgage application process?
Ideal for me would be 6 months.
Mm-hmm.
You know,
Okay.
It takes time to fix things if they need to be fixed, but just feeling comfortable with your process and not being rushed. So by the time we're ready to have them pre-qualified and give them to you to go look at homes, they know how much they have saved, how much they need. Their credit is as good as it can be. I'm not saying it has to be perfect. We've got programs for that too. And we know that they are on top of their finances. So anything that they feel like they want to pay down has been taken care of. And sometimes it's a matter of giving them advice not to pay something down. You're fine. We'd rather see you have a little more money in the bank. That would make you more easily qualified.
Okay. So I know that there are some programs that are specifically designed for first-time home buyers. Can you define for us what exactly a first-time home buyer is in the mortgage industry?
Yeah, it's not exactly what you think. Obviously, it could be somebody young or somebody middle-aged that hasn't owned a home before ever. But also, legally, it's anybody that hasn't owned a house in the last 3 years. So for whatever reason, somebody changed states, somebody had a credit event where they couldn't own for a while. If they haven't owned for 3 years, we consider them a first-time home buyer.
Okay.
And they can be young, they can be seniors, and we can take advantage of those programs. Some of those are to help with down payment. Some are just to give them a little advantage in terms of rate and payment and mortgage insurance being a little lower.
All right, so I heard you say help with down payments. So I'm sure there's some first-time home buyers out there and their ears are ringing. Are you saying that there are programs out there that help with down payment assistance?
There are a number of them.
Wow.
And it depends on the county, the state. There are even some city programs that are available for folks. It's usually for lower income earners, and it'll give them a little boost to be able to get into that first home.
Nice. So if someone has questions about a down payment assistance program, who's the best person to call?
Well, I can think of one. We actually have kind of a matrix we can take people through and see what it is that they really need. Sometimes it's a matter of needing money for down payment and closing costs, but sometimes they've got the money and they just are not high income earners. So we've got programs for that scenario as well.
Okay, nice. You mentioned down payment costs. So for that new home buyer who has never bought a home before and has never been through the process, what are some of the fees that are involved in the home buying process?
Well, in addition to the down payment, which with traditional loans is 3%, 3.5%, those are the lowest. Closing costs could run another 2.5%.
So 2.5% of the purchase price of the home?
Yes.
Okay.
Yeah. And it's actually based on the loan amount, but that's pretty close if you're only putting 3% down.
Oh, right.
But the fees include the lender fee. We've got a processing fee, which is nominal, and then appraisal, credit report. There's a number of title fees, which are important. There are recording fees paid to the county when we close. So there's a number of fees that we pay up front at the time of closing. And then insurance, you'll pay your first year's homeowner's insurance up front at the time of closing, and we'll collect a couple months of that and a couple months of property taxes. So you've got a little escrow account which we'll pull out of to pay those items for you each month when they're due.
And in addition to that, I should definitely mention that there are some changes to the procedures in the real estate industry as far as buyer broker commissions go. So if the new home buyer is in a situation where the seller is not paying for buyer broker commissions, that is an additional fee that new home buyers would need to budget for and save money for, because those are fees that cannot be rolled into the mortgage.
That's right.
So great. Now, a lot of first-time home buyers are dealing with student loans. Julie, how do student loans affect a new home buyer's ability to, or any really home buyer's ability to qualify for a mortgage loan?
Well, that's definitely a big part of their debt picture. And that plays into the debt to income ratio that we use as we're qualifying people. That said, we've had situations where somebody's debt ratio is high because of student loans, but they might be at the very beginning of their career, and it might be a very lucrative career. And we could say, listen, I think we can push those boundaries just a little bit because they're going to be making significantly more money, and this student loan payment is going to become less of an issue as they make more money. You know, our guidelines are meant to be a guideline, and we are willing and able to make loans to all kinds of people by stretching those sometimes when we need to for good reason. Mm-hmm. And we document what that extenuating circumstance is and how it's going to be overcome.
I've heard of programs like that. For example, students that are getting into the medical industry where their compensation in the future is expected to be far greater than it currently is as a student.
That's right.
So great call out there. I think what I really love about your industry is that you have so many options, especially if you're a mortgage broker. You have so many products to choose from that you can truly find the best one for your client based on their circumstances.
I like to show them different options and then help them choose the best one for them. And it's usually pretty obvious. You know, they don't have 30 choices. They really only have probably 2. So that makes it easy.
So if someone is set and has found the home that they want and they want to ramp up they've done the process backwards and they want to now get qualified for the house that they found, how long does the process typically take from start to end?
Okay. Generally, say 30 days.
Okay.
Yeah. And that's usually pretty comfortable. On occasion, we've got to really rush it. And if they're in good shape and well qualified, it's easier to do. if we've got things to overcome, we may need a little more time. But I'd say 30 days is the expected rule of thumb.
Okay, so 30 days. Speaking of timelines, another burning question that I get from people that are considering buying a home for the first time is, how long do they have to stay in their job in order to qualify for a loan? Can they bounce around every 6 months? What's your advice?
We would prefer they didn't, but there are situations where that has happened, and all you can do is start with what we have. As a rule, we are looking to verify 2 years of employment history, and that can include more than one job. It can include several jobs. It will also count if they have education that led up to this job, or military service that might have gotten them into this employment. So, if you've got a question about that, it's best to give me a call, and we will find the best way to document it.
Okay, sounds good. I actually had a client who just moved from Texas, and it helped her that when she moved to Arizona, she stayed within the same industry, didn't get an entirely new job. Mm-hmm. It helped her and her husband qualify for a home here in Arizona, and they were able to buy pretty quickly after they moved here. Always best to talk to the expert on the different ways that we can acquire information to help new home buyers qualify for their mortgage loans. So Julie, one of the things that I'm seeing from a lot of people that are considering, they're kind of on the fence on whether or not they should buy as a new home buyer, is it really worth it? Isn't it going to be more expensive for them to buy a home and pay a mortgage versus continuing to pay rent? When you look at the numbers, is it really worth buying a home? What do you see in the numbers?
Well, it's not just numbers. Obviously, there's an emotional quotient to it as well that can't be explained in just numbers. But I've found that adding the expenses for the down payment, the closing costs, maintenance on the home, maybe at year 4 is about when you break even, because considering your rents are going to keep going up, your house payment's going to stay the same. So it might feel like a struggle that first year, but after that it's like, whew, I'm sure glad that that's not moving. And about year 4 is, to me, where the break even is to your advantage to buying a home. So obviously if you live in a home for 10 years or 20, you're going to be way ahead of the game. Plus, you're going to have that asset,
Right. So obviously the scenario will change depending on the market and what's happening with rents. But in general, from a real estate agent's aspect, I have to say that it's really always a good time to buy a home, as long as you buy and hold. And so to Julie's point, it takes some time to break even and actually come out better than if you were renting. But once you hit that 4 or 5 year mark, you are, number one, no longer at the mercy of a landlord and how much they increase rents. And anybody who rented within the last few years knows that rents can go up astronomically. I think they rose 25 to 30% in a single year in our area a few years back. Once I think more people that are on the fence that are considering buying a home realize that long term, and we're talking, 10, 15, 20, 30 years down the road, they're in a way, way better situation having a mortgage that locks in their lodging cost, which is usually the biggest cost for families. It locks it in for a full 30 years. But in addition to that, you mentioned the equity, and it's the equity from your first home that ultimately funds your bigger home for your family and ultimately funds your retirement home. So I guess new home buyers out there, if you don't get started, you won't be able to continue in the home ownership arena. So great information. Thank you, Julie. Many people who are considering buying a home are a little nervous about the mortgage application process. And so I'm just going to ask this question to get the elephant out of the room, and that is, what happens when someone's mortgage application is denied? What are their next steps?
Well, first of all, they'll always know why it was denied. So and I never say, no, you can't own a home. It's just not now. They will know what they need to do next, whether it is a case of stay on the job longer or work on credit. We have a lot of capacity to help with suggestions for credit repair. If it's a matter of paying down debt or selling a car to make it happen or something, we will give them suggestions. So the answer is never no, it's just when.
Right. And what I like about your industry is it's so measurable. You mentioned in a previous conversation about debt to income ratio. Generally, can you explain what debt to income ratio means?
Sure. We take the existing debt that a person has, payments for credit cards, car payments, student loans, furniture, add that to what the new house payment will be and divide that by their gross monthly income. And that ratio determines, in a big part, what kind of loan we do. Some sources will allow us to go up to a 50% back ratio. Others are 40 and others are less. It helps point us in a direction. And sometimes it's better to pay down some debt to get in a better range. Other times it's better to have the money in the bank. That's something we can always determine. Like you say, it's measurable. So we can always play with the numbers.
And that's an excellent point. I've learned through partnering with my lender partners that you really should talk to them before you do anything with your finances. Like if you make a decision, I'm going to pay off this card or I'm going to pay off this, talk to a mortgage lender if you're in the process of wanting to get approved to buy a home, because they can tell you the most effective way to apply your funds to help you get qualified for a home loan.
On that note, I'd like to add that once you've started the application process, don't apply for new credit. That it can cause an inquiry to your credit report. It makes us see it, and then we have to find out, well, what's new? And I've had this happen where people will go out and get the furniture before they buy the house, and all of a sudden they don't qualify for the house. So just pay cash.
Or wait.
Don't run up those credit cards and don't apply for any new credit in that process.
With that said, one thing that I want to clarify is, as a real estate agent, is that once you are under contract for purchasing a home, make sure that you do not, and you can certainly add your 2 cents here, Julie, make sure that you don't change the picture of your credit, whether it be your debt to income ratio or your credit score or whatnot. So what that means is once you're under contract, don't go buy that fridge that you need for your new house or your washer dryer or a new car, because all of that could ultimately disqualify you from purchasing the home that you're under contract for.
Yeah, a lot of people think, oh, you've got the credit report, so now I can go do what I want. We can see that. We subscribe to a service that lets us know if there's any more debt for that exact reason. We don't want to put you in a situation where you're not successful as a homeowner, and being over indebted is not a great way to start out, so
right.
Don't do it.
Don't do it. I'm excited to be speaking with Julie Mason with Fairway Mortgage, and I really want to hear from her. It's a burning question from all those first-time home buyers out there that have been on the fence here for a while, and now they're starting to look back into the market and consider purchasing. I want to hear from Julie her top tips for first-time homebuyers and what they can do to help them qualify for their first mortgage loan. Julie, what would those be?
Well, first call me. And then we can go through the rest. But definitely make a budget. Know what you're comfortable with as far as a payment, and we can work with that. And then the next would be pull your credit report before you even see me, so we know if there's any challenges there, or if you've been doing everything right, I can pat you on the back. And the third would be to be sure to not incur any new debt, not even apply for new credit while you're in the process of buying a home.
All right, great tips. I want to say something on the make a budget. So often my clients will be qualified for a larger loan than what they want. And and it doesn't fit into their budget. So excellent point from Julie. You really have to, obviously get qualified to buy a loan, but you have to be comfortable with that loan. You may choose not to go shopping for a house that is priced at the price point you've been qualified for. So that's excellent advice.
That happens often, yeah. But that's perfect. That's who we want, is people that want to pay less than what we qualify them for. That's great.
Excellent.
But then our job is to find them the best house that fits the payment they're comfortable with. So that's a great challenge to have.
Great. I have another question regarding credit score, because this is another really big question from first-time home buyers who have been almost afraid to buy a home. Part of the reason is they don't want to get started. They don't, they don't know what is entailed, and they're also afraid of not being approved. So my question to you is credit score. What is a range of credit scores that first-time home buyers should be shooting for? I know that there are programs in place to help first-time home buyers that are a little bit more forgiving if their credit score isn't the highest.
Right.
But what is a range that they should be shooting for with a credit score?
Well, I'd like to say we don't want to see anything below 580. There's not a lot we can work with then. If you can get up to 680, that would be a wonderful goal if you're in that range. That'll give you a lot more opportunities. Certainly we can work with less, but 680 would be a good goal, and then your next one's 720. And 720 and above, you'll get the best rates that are available out there.
Okay, great. So I was going to ask, what are the benefits that come with a higher credit score? So better rates, lower mortgage rates.
And lower mortgage insurance as well, which is a significant cost for people that don't have 20% to put down. You'll have mortgage insurance, which is our friend. It allows you to buy a home, even if you have lots of money, put less into the home, into the loan, and maybe save it for improvements to the home or add a pool or whatever it is you want to do. But the mortgage insurance you'll pay for a few years in most cases. And then once the house is appreciated to the level where you have that 20% equity, then we can either refinance it, or in some cases it will fall off automatically.
Okay, I'm really glad that you brought up mortgage insurance, because a lot of first-time home buyers don't know what that is. In fact, a lot of first-time home buyers think that they have to put 20% down. So what I'm hearing you say is that first-time home buyers can put less down, 3.5% in some cases, and the trade-off is that they pay that mortgage insurance to insure their mortgage as they get through a certain period of time, and that can be removed, or the loan can be refinanced to be more favorable for them.
That's right.
So Julie, thank you so much. You've shed so much light on the mortgage process for someone who's never been through it or hasn't been through it for a long time. And certainly any of you out there that have questions, I will have Julie's information in the notes, and you're welcome to reach out to her or to me, and we're here to help you out. Thanks so much, Julie. Appreciate everything you do.
Thank you, Brenda. Appreciate it.
If you liked this episode and this information and you found it valuable, that is my goal. So please like, share, and subscribe, and we'll make sure that you continue to get this content. Thank you.